Hey everyone, you're watching News of the Money World with myself, Darcy Ungaro, and yourself, Rupert Carlyon.
Rupert
How are you, Rupert?
Carlyon.
Yeah,
I'm
is
very
that
good.
right?
How are you?
You are Rupert Carlyon. That's
Yeah,
right, that's my name.
I am today.
Cool. Hey, we've got tons of stuff to cover, so let's get stuck into it. We want to talk about helicopter crashes all the way to AI and how to hedge in the current market. So let's start with Iranian president. In my notes here, interesting, you wrote it as killing of the Iranian president. So let's start there, right? Uh, we
Well,
have
I've
President.
clearly been logged into my Telegram account and listening to the Russians.
There you go. The truth comes
Um,
out. Hey, it's not me that's conspiracy theorist for once. That's great.
no, look, it's a really interesting one, right? So I think with a region which is clearly hot is probably the best word that you can use at the moment. When anytime you've got the death of a president and a foreign minister, it always is going to cause a whole lot of conspiracy and a whole lot of thoughts and issues. Um, I think, but what we've seen over the last couple of days or the last 24 hours is that oil prices haven't moved. So that's probably the biggest indicator of all. The markets are going, this is a non-event, and this is exactly what it seems. Equity markets were up last night. So there's nothing really in there that goes, is anything spurious, or markets don't believe there's anything there. The big risk will be how this plays out over the coming weeks, when Russia very quickly announced that they were happy to help with the recovery process, but also with the investigation to determine what happened. And so that kind of was an interesting set of words, which I think is paving the way for all of these conspiracy theories to come. And politically, it's potentially quite useful for Russia and Iran and some of those other countries to go, this was done on purpose by Israel.
Yeah. Well, the best joke that I saw, which was taken not as a joke, I think on the other side of the team, was the helicopter pilot, the Jewish or the Mossad agent that was flying the helicopter was named Eli Copter, and hilarious on one side, not so funny on the other. But it'll be interesting just to see whether or not this event actually de-escalates or
Yep.
whether it increases the odds of escalation, which is already kind of on the knife edge. But and I don't know, it's weird though, right? Like with geopolitical risk, the longer the risks seem to be sustained for, or the events like Russia, Ukraine, the more the market just kind of brushes it off and a new normal is achieved. So it doesn't seem to upset like things like the oil market, which I find surprising.
I
It's just
think the
interesting.
problem that we're in, and look, we even talk about it offline as well, the struggle of kind of the news flow at the moment. Markets have kind of got to the point of, we don't really care what's happening. It's just,
Yeah.
it is what it is. We'll just keep on marching north. We saw last week it was a slowdown in the US economy. Who cares? We see last week the Israeli government's kind of looking closer and closer to falling apart. Who cares? There's very little, I guess, reaction to the news and to the things that are happening, and so that's why I think that's where we are, right? All anyone is focused on is interest rates and the inflation game and what's happening in the US.
Mm.
But at the same time, they don't even really care about that. So it's a really funny world, right, where markets just seem to be sleepwalking north.
Yeah, it is. It's a funny new world. It feels like there's some sort of new regime. It feels like the good news is bad news story is not necessarily going to be replaced with the bad news is good news story. In other words, if there's more talk of, I guess, recession globally, then interest rates will drop. That's good for markets, goes up. That might be true, but behind that is another layer, which is the global liquidity flows, which fascinate me, even though I barely understand it. But it feels like the more money there is out there in the system, logically, the more likely you're going to see risk assets improve. The New
Yep.
Zealand dollar, you could say, is a risk asset. So is
Yep.
Bitcoin and tech
Yep.
stocks and some commodities to a certain extent. So I guess the question I have for you, Rupert, is what are the FX markets saying? And I'd throw in there the
Yep.
commodity markets as well. What are they saying about what's going on right now?
Oh, look, I think FX markets probably, and FX and interest rate markets are probably the most actively to watch in terms of the inflation in that game at the moment. It's been really interesting over the last kind of 3 or 4 days. We've seen some massive moves in the New Zealand dollar. It's gone
Yeah.
from kind of 59.5 cents against the US all the way up to 61.5, which is a big move, particularly for considering the difficulties that the New Zealand economy is now facing. And I think the truth is a big chunk of that is due to US dollar weakness. So we saw last week a pretty weak inflation print coming out of the US, only one print versus three or four, which had come out stronger. And so people grasping onto the one positive news versus ignoring the three or four before that, which they didn't like. But I think, yeah, it is kind of really interesting, right? So we've got the FX market and those moves, and we have actually strengthened, just looking at my screen sideways, we have moved strengthened slightly against all of our other currencies as well, across the better part of the last week. And I think, and we saw it over the last couple of days with banks coming out with their announcements in terms of what they expect the OCR to do and then the timing of those OCR cuts. And so increasingly it's looking as though we're in a world of everyone saying, you know what, New Zealand's higher for longer.
Mm.
And increasingly banks are starting to go, maybe we're going to get to the end of this year without any rate cuts.
Hmm.
Personally, I would be surprised at that. The level of pain from a lot of the consumers and a lot of the people that we speak to indicates the Reserve Bank is going to have to do something faster than that. But at the same time, yeah, it is really interesting, right? New Zealand is positioning itself for a much higher, for much longer kind of environment at the moment. And that's why we've seen those moves in our FX market as well.
Yeah. Again, it's like this. It absolutely has to be in the category of conspiracy theory, I think, because I just don't see a reason why this would happen in any normal, natural environment. I still don't understand the motivation of this, but it feels like central banks are increasingly acting from the exact same script. And different reasons to explain it maybe in different countries, but I could have told you at the beginning of the year that it was higher for longer. And in fact, I probably spent a month deliberating every single day trying to find different angles as to which way interest rates are going to go. But it kind of feels like whatever the story is, it will be higher for longer interest rates. And therefore, it feeds back into the rational strategy when it comes to hedging,
Yeah.
personally, first with your mortgages, that it should be about risk management. It should never be about speculation, because there's an entire industry of professionals, like myself included, that have a vested interest to be optimistic and have also a conflict of interest around the area of sending this kind of warning out there, because no one buys negativity when it comes to this sort of stuff. But I think it's really important just to be prepared for that possibility that interest rates could stay higher for longer, and also to just check yourself if your expectation is that you can always sell your property to get out of trouble because everybody else is thinking that. Then what does that do to the property market? It just increases the risk. So
Yeah.
with hedging, we talked about the property side just there, but on the equity side, if you were thinking about where markets are at right now, i.e., really, really elevated, how does one hedge, or how does one protect against the downside risk that there could be a severe market pullback?
Yeah. So it's an interesting thought that's been running through my mind over the last couple of days, right? Where you go, well, actually, yeah, the comment that we said earlier, where we seem to just be sleepwalking high no matter what happens. And what do we know? We know we can sleepwalk high until we no longer can. We also know for the last 2 years, a lot of people have been pretty nervous about the stock market, right? Currently trading at a 25 times PE versus long-term average of closer to 17, 18. That PE seems to be growing wider and wider at the moment. And so do we get to the point of going, well, actually, we don't really want to pull out of the market because, hey, if we'd made that decision 12 months ago, we'd be 30% poorer, because markets have done so well. So is there a way that we can protect ourselves on the downside and protect some of that risk? And that's where the hedging strategies come in. And no doubt it's a lot harder to kind of enact hedging strategies when you are at the retail level. But there are some things that you can do. So if you go, I want to stay invested, but I'm happy, but I kind of want to cap some of my downside risk and make sure I'm not there. And so the two things that we kind of go and we talk about to people are, one is you can take out some options. And so you go onto websites like Interactive Broking, CBOE Markets. There are a whole lot of kind of places where, as retail investors, you can go and buy options. And so if you're scared about markets falling, you might go, well, actually, I'm going to buy a put option. So that means that if I buy a put 6 months out, I can force someone to buy those shares off my basket of shares off me at a specific price in 6 months' time. So if I take out a put option today, for example, at current market prices, and the markets materially drop, then actually I'm going to make a whole lot of money back. I'm not going to lose my money because I can just sell my portfolio at that cost I've taken the options out.
Mm.
It is slightly complex. It is expensive. That's the other thing to remember, right? So I had a quick look. Even though the costs, because volatility has come right back, the costs have come right back as well. But if we're sitting there saying S&P 500 is currently trading at 5,200 all-time highs, if we take out an option 6 months out to kind of at 4,800, for example, so we're going to kind of take where the first layer of downside, but protect ourselves against that, then actually we're looking at a world where that's going to cost you about 4 or 5% of the underlying assets. And so that's quite a big cost to wear as well. Which then, and it's also quite a complex strategy to run. And so it's a very, very tough one. This is why, one of the reasons why a lot of institutional investors kind of shy away from it is because of the costs. And if you keep on doing this over the medium term, then it acts as a massive, massive, massive drag on your returns as well.
Mm-hmm.
The second option that you can have and that you can have a play around with is ETFs. The beauty about the ETF market in the US over the last 6 to 12, 18 months is there have been a plethora of new products. And there are a whole lot there that have kind of set themselves up to protect against the downside. And what they do, what a lot of these products are doing is they are selling a put option, they're buying a put option, which might cost them 4 or 5% to protect against the downside. And then on the other side, they are selling call options. So that what that means is that actually, if the markets go way, way, way higher, then actually your upside is capped because someone's going to buy those shares off you at a specific price. And so there are a whole series of different strategies that you can do, which kind of constrain your return within a certain set of parameters, but kind of allow you to take some, maybe not all of the upside, but a whole lot of the upside without any of the downside. And so, look, if you are a bit nervous about what's happening, then it is an interesting option, right?
Yeah.
The
Pardon
better,
the pun.
safer, more successful way of hedging, though, is just make sure you got the right time horizon. If you are investing for the medium to the long term, so you go, look, I'm here for 5 years, I'm here for 10 years, then actually you go, fuck it, I'm just leaving it alone. It might fall, it might not, but I know that actually the more I try and hedge, the more I try and play with it, the more it's going to cost me. So actually the best hedge of all is just to have a long-term time horizon and let it go. And if you don't have that long-term time horizon, you're probably best pulling it out and putting it into treasuries or term deposits.
Yeah, I think what you're touching on is possibly one of the biggest things that we get stuck on, right? Is what do I do with the pots of money that I know I'm going to need in the next, say, 5 years,
Yep.
and the pot that I need from 5 to 10 and then 10 plus. And that's where considering your horizon for when you want to use that money is really important, because that determines which asset class you should be investing in, rather than chasing the return and then being forced to adjust your time horizon because you're trying to ride through the valley. And I love the options idea, right? Like the option, but not the obligation to either buy or sell
Yep.
at a predetermined price is a really cool concept. Like if you really want to nerd out, that is the way to do it. I've yet to meet like an everyday investor who actually does that as part of their investing strategy. Usually it seems to be quite common with those in more the trading space, or
Yep.
those that can't liquidate a long portfolio themselves because maybe it's an inheritance, and so they'll buy that as insurance while they're waiting for it to come through because they're offsetting a commitment they have. I actually just like to recommend to most people, hey, just diversify. It's kind of what you're touching on as well, but it's like if you don't want to get too complicated in terms of these instruments and you feel markets are elevated, then buy the other things that no one really cares about too much, or no one kind of thinks too much about. And traditionally that's just growth assets and income assets, but I know it's pretty basic. There's levels of in between, right?
Yeah.
It's an important strategy though, just to think about risk, because on the way to getting a return, it's a bumpy ride when you zoom in. Sometimes there's ups and downs, catches us off guard, right? And it's painful.
Yeah. And you're better off having the right set of assets and the right asset classes rather than trying to change the risk profile of underlying asset classes as well, which is effectively what hedging is doing.
Exactly. Yeah. Okay. So on the topic though of just risk and elevated markets and getting it wrong occasionally, I wrote a blog recently just talking about my perspectives on AI and with Nvidia in particular, because about maybe 6 months ago or so, I was fairly critical or very skeptical, I guess you could say, around the growth rate of Nvidia. So Nvidia, one of the Meg 7 companies, I think they're what, there must be number 3 or something like
Yep.
that at the moment. They are really well positioned for the AI land grab, and because they kind of build the hardware that really keeps the new hive mind going. And like the matrix that we're all going to be plugged into soon, that's what's running it, right? So it feels kind of like we are early but also late if you apply old standards. Like, how could a company like this grow that fast within this short period of time? It can keep going, and that's the weird thing with exponential curves, and that's what Nvidia taught me. Because if I was picking stocks, which I haven't been, thankfully, I possibly wouldn't have picked that one. And
No.
it's proven that, hey, it doesn't work anyway. Even if you look at the fundamentals, you're probably going to get it wrong, right? What are your thoughts on Nvidia though, and just the whole AI theme? Because I think that's kind of an interesting one to watch at the moment.
Oh, look, I I don't have huge thoughts on Nvidia. To be fair, I haven't done a huge amount of work on it. I think at the moment, what's pretty clear, right, is it is the clear winner in that space, right? Chips are needed, and they just can't produce enough. And it's pretty rare that you find a company which despite their size and kind of law of large numbers, every single year, every single quarter, they're kind of upgrading their guidance by another $2 billion. So results are due tomorrow. Everyone's sitting there going, yeah, they've guided to this, but we think it's actually going to be $2 billion higher. You go, fuck, that's not a bad outcome for a
Yeah.
quarterly profit number. And so the expectations are pretty large. But I think I'm in your camp, Darcy. After that first move in January, I think it was when they reported their December announcement of results, everyone was like, oh, it's too late. It's done. It's done. It's done.
Mm.
Um, but actually, you use those great words, the power of exponential growth. I mean, if we believe that Nvidia is the whole chip industry becomes Nvidia, if we believe that it is kind of got such a strong base and will keep on getting there, then actually potentially it looks cheap. I look at kind of something like the Azures of the world, the AWS with Amazon, where everyone said, "Oh, the data center market's only so big, so how can they kind of keep on growing that business?" I mean, Microsoft
Yeah.
is a really great example of a business which is, I think it's the largest in the world. It's definitely the largest listed company in the US.
Mm.
Um, maybe Saudi Aramco might be the one listed company that's bigger than it. But what's fascinating about it is we've said for such a long time that, oh, it's so big, it can't keep on growing at 10, 15% a year. But they keep on doing it because they've got this culture of innovation, all of these things. And it's kind of, at the moment, it's AI, but previously it was Azure. Previously, it was kind of the moving online and kind of turning Office 365 into a SaaS model. And so I think that's where it becomes really interesting. These companies can keep growing, and particularly when you are in a segment like Nvidia, where actually we have no idea yet how big the segment could be. Who knows, right? The chip market in 10 years' time could easily be 15 times what the size of the chip market is today, because actually AI has meant there's so much more demand for these very high end chips.
Mm.
And so that's why what I would view is I don't have a particularly strong view on NVIDIA. I can see, can it become a Microsoft story and can it keep on going? Potentially. Could it
Mm.
become a Tesla? I mean, Tesla, right? Where again, we said 3 years ago, we said Tesla is the number one maker in EVs. It's an amazing category. It's going to take over. Blah blah blah. 5 years later, 3 years later, Tesla's now 75% down. So my point is, I don't know which of those two outcomes it becomes, but there's enough in there that I like the story and I like kind of enough of it. So therefore, to me, playing these games and playing these exponential growth stories, it all comes down to risk management. we have to be very careful about how we're playing in these investments and what we're doing. And so what that means is it's going, let's kind of using our pot of funds and our pot of money and go, well, actually, where do we think it lasts? Sorry, how much do we think it's worth allocating? Is it a 5% allocation? Is it a 7% allocation? Is it a 10% allocation? And we come up with that set of numbers by going, well, what actually happens to our portfolio if it drops by 50%, if it drops by 75%? Is that going to cause us some massive issues? If the answer is, well, not really, because we're here for the long term and we've got some other things that might offset it, great. That means you might go to 10. If you're going, oh, I'm actually a bit nervous and I really don't like losses and I don't like this and I don't like this and I don't like this, then maybe your number is 5%. The trick to successfully playing these companies is going, well, you're going to set your risk tolerance, set what you believe your maximum allocation should be, and then you've got to stick to it. And by sticking to it, what that means is that you, when it doubles in price, you take some of the profits. So you rebalance, you trim the top, and you kind of reallocate that to other parts of the story. It's always hard because you kind of take the view that you're missing out on some of those gains. But at the same time, think about investing. We've talked about lots. It's about managing your downside. And if it does actually drop by 75%, you'll be thanking your lucky stars that actually you did that on the way through. I mean, so Bitcoin is a good analogy for us, right? Through the kind of KiwiSaver scheme where you can buy your Bitcoin, and where we do kind of trim people's portfolios and we kind of maximum of 10%, but we'll let it ride to 15 before we take the trim. People hate it that we do that because at the moment where the price is only going one way, everyone's really happy at it. But I guarantee the moment or if Bitcoin price falls, people will be extremely thankful that that's the approach we're taking.
That's right.
So that's why I kind of a very, very, very long rant when you ask the question of what I think about Nvidia. It's got potential, but I don't really know. But I just focus on the risk management, and that's where I think people need to go on this.
Oh, 100%. And I hear what you're saying around that mandatory rebalancing around the Bitcoin allocation. At the moment, everybody would be real. I still think it's fantastic because you can still get Bitcoin outside of KiwiSaver, so don't sweat it. Yeah. That's exactly why you construct your own portfolio in some areas as well. But and that's probably connected to the hedging strategy that we were covering before, right?
Like if there is exactly right. So portfolio allocation is a much cheaper way to create hedges than actually going and hedging.
Yeah, you nailed it. But just on that AI theme, a little bit more, I think, just to really fully, well, I've been really fully just thinking about this a little bit deeply since the ChatGPT 4.0 was launched recently. I've been playing around with it this morning on the way to taking my kids to school. I got them to throw out just some random stuff that they were thinking about. I spoke it into my phone. It came back and it gave us like this 10-minute story about a couple of gunfighters and stuff like that. It was bizarre what it was capable of actually just generating on the spot within seconds, just with really simple prompts. And that's the tip of the iceberg. But what it's been making me realize is that we really are at the cusp of a new age. This technological age, it really is going to the next level. And when you think about the compute power, like the hardware and the actual infrastructure that needs to power and underpin both Bitcoin mining as that becomes more adopted or becomes adopted better, more. I don't know how to use that language today. And AI, as that becomes exponential as well in terms of the requirements to build out the infrastructure, a couple of things. Everything around the periphery of data centers is going to be very, very interesting over the next little while. And also power consumption is going to be very interesting as well. And so it's fascinating just to like really unpack the theme of, I guess it's more data rather than AI, or compute power as a thematic is a very interesting concept. And I know with the Kora KiwiSaver, there's a clean energy thematic fund. There's a property thematic fund, which is pretty cool. Do you think you might ever get into some sort of AI or compute thematic fund?
Yeah, no, look, we're always looking at the different things, right? And I think you are 100% right. AI is a really, really interesting kind of story. At this stage, it's still pretty early though, right? And what we've actually seen that over the last 6 to 9 months, where you saw ChatGPT saw this massive wave and this kind of anything with AI, a little bit like where blockchain was kind of 6 or 7 years ago.
Yeah.
Anything with
Yeah.
AI in its name or anything close to AI just went fucking gangbusters. And then a little bit like Eric Watson turning his company at Long Island Iced Tea into Blockchain America. And of
That's
course,
right.
it
Yeah.
just
Yeah.
share price
Yeah.
jumped 100% on the day. Pity he told all
Yeah.
his mates about it, some insider trading, but that's a different conversation. Um, and I think that's also what we have to be a little bit careful of with some of these themes. They become very, very popular around certain things, and then they kind of die
Mm.
because they will come back. So I think AI will come back over time. It's just a little bit about going where and how does it kind of play out. So what is the answer for it? Who wins? Who doesn't? I mean, I find the AI conversation I actually find absolutely fascinating because
Mm.
I think there will be some big winners, but there will also be a lot of losers on it. A good
Yeah.
example of this I give to people is like um, is Adobe. So my Adobe subscription cost me, or as a business, I think it was $300 a year. Um, Previously, that Adobe subscription for had probably had a marginal cost for Adobe of like $2 a subscription because there was actually a little bit of data involved with each person, a little bit of processing, but not much else. Today, because now all of a sudden we're getting all these amazing AI tools inside
Totally.
it, the processing power that's going to be needed to run all of those tools is going to be massive. And so, does that mean that the marginal cost to deliver that product to me and my business has gone from $5 to $100? I don't really know. But you think about that across this whole ecosystem. And for once, I think we're going to move into a tech world which has gone from a very, very, very low marginal cost to deliver to a much higher marginal cost to deliver. That
Interesting.
means that I think a whole lot of the people that are serving the end customers are going to struggle because they're going to struggle to monetize, because it's going to struggle. People are going to struggle to kind of understand that and then pay for it.
Mm.
And they're really going to have to display great value for that. I mean, ChatGPT is another amazing example, right? A
Mm.
huge amount of the investment that Microsoft has put in is not actually cash. It's the ability to kind of use the Azure data centers for free.
Mm.
And so, yeah, and then you go, so then there are the infrastructure providers, right? But then you go, well, actually, the infrastructure providers, the data centers, the Nvidias, that kind of part of the world, do they win? Probably. But I can guarantee data centers is likely to be a bit of a boom bust mentality. The question is, how long does the boom keep going before we get excess supply? Anyone that
Mm.
can is building data centers as quick as they can right now.
Yeah.
So that kind of guy, I'm not sure that's a sustainable long-term play. You got the chip makers. Again, they'll have a great run until they don't, because we move into an oversupply world. But actually, you nailed it right at the start. They're actually the safest play in the AI space, electricity. Because actually,
Mm.
electricity, you go, well, yeah, that's not going to get displaced. We know that it's like in so many parts of it. Yeah, I personally, I think
Mm.
increasingly I'm of the view that the safest way to play AI, the safest way to play so many of these mega trends right now is energy.
Yeah.
Clean energy has to be the way to do it, right? Not buying oil and gas, not buying coal, but actually going clean energy because we know we are increasingly in an energy deficient world. We know that a whole lot of countries, there's a great article this morning talking about how Luxon and the national government are changing their tune on climate change and going, actually, we kind of have to take this a whole lot more seriously because we've just done our trip on Asia. And every single meeting we had with every single foreign government, climate change was the number one thing they are all thinking about. So we need to
Mm.
bring that back to the table.
Yeah.
So, yeah,
I
for
guess.
me,
Yeah. Go ahead.
yeah,
Sorry.
that's kind of where it comes back to, right? Is AI, how do you play it? Is clean energy the way?
Mm. Well, on that, like whether it's for the environment or whether it's to make a play on these exponential technologies that require a lot of power to run, renewables makes the most sense because
Yeah.
you have all your upfront cost and then every kilowatt you produce after that effectively is free, sort of. But this actually creates like data centers create the demand that's needed to provide the correct incentives to build out the infrastructure for renewable energies, which is why I think Bitcoin is so amazingly good for the environment, not bad, because it, like AI, can provide that demand that's needed. And I should really mention this because it's interesting. I've been following the price of Bitcoin. It kind of connects to what we're talking about. I've been following the price of Bitcoin today, especially because I've noticed a few little interesting things happening in this space today. And even just when I caught up with you, and I just opened it up right now, it's gone up by 7%. Ethereum's gone up by 20%. A lot of
Wow.
the other assets between 10 up to 26% just in the last 30 minutes. So I'm not saying, hey, everybody, let's just ape into crypto now. But it just goes to show that the greatest amount of volatility often accompanies those investments with the greatest potential or the greatest promise. But it brings it all the way back down to our time frame. You have to kind of do your research, understand what the future will look like, make a position, but then stay the course, right? Maybe do a bit of hedging around the edges, but do that through portfolio allocation instead of trading. But there's some pretty amazing times I think ahead, and because we are in this exponential age, we really are, and it just means that, hey, if you are an investor, if you're able to kind of manage your finances well enough to create some surplus income so that you can invest it the best you can, I think you're gonna be okay if you just stay the course, right? So
Ah,
um,
massive, right? Well, that's what history's shown us. Staying the course is where you win.
yeah, that's cool. Awesome. Well, we've covered a ton of ground. Yeah, from Iranian president all the way to Bitcoin mining. This is amazing. So, yeah, thanks, Rupert, for the chat. I look forward to catching up next week as well,
Yeah,
and
thanks, Darcy. That was
see what
awesome.
happens.
We'll speak next
Yeah.
week.
See ya.